putting you in the driver's seat. Materials provided by Genesis Financial Management. Questions to ask yourself before the big buy. Why are you buying a car? What are you planning on buying? Where are you buying it from? When do you need to plan to buy or lease? And how much do you plan to spend? And how will you pay for it? Our goal today, to help you save money on your next car purchase. This presentation will show you how to avoid being targeted for higher cost financing. We're going to cover planning ahead for your purchase by saving for a down payment, researching types of cars, and being shopping smart, which could save you thousands of dollars. We're also going to cover researching loans and interests, how some dealers subjectively hike the car loan rates of buyers who arrange financing through their dealership, the hidden finance fees, which can typically add at least $1,000 to the cost of an auto loan, and what you could do with that extra money and how it can go towards your emergency fund, buying a home, saving for retirement, or other things that could really make a difference in your life. The 5 top car buying fears. Fear of the unknown. Fear of buying a lemon. Fear of getting taken or looking like a sucker. Fear of negotiation. Fear of getting stuck with an unreasonable payment. Fortunately, after this presentation, you should have the knowledge and resources to make sure you're getting the best deal possible. Don't buy on impulse. Have you ever known anyone that bought a car on the spur of the moment? Maybe it was brand new and fully loaded, and maybe they just finished making payments on their last car. We call that car fever, when you just have to buy that car right now. One of the most important pieces of advice we offer is to slow down. If you're in a big hurry to buy, you're already at a disadvantage. You need to take the time to save for a down payment, figure out your budget, research cards, and look into financing. Car buying to-do list. Save for your down payment. You'll want to start saving at least 8 to 12 months before the purchase. The more you can save up for a down payment, the better. Every dollar you can put down on a down payment is a dollar that you don't have to borrow. And when you borrow money, you pay interest. The recommended car payment on a car is 20%, but the average down payment on a vehicle is about 12%. If you don't put down a significant payment, you risk being upside down with your car loan, which means that the value of the car is less than the amount you owe. This can make it difficult to sell your vehicle without having to come out of pocket in some way. If you can't save enough, consider trading your current vehicle in. The trade-in value is often below the wholesale value, which depends on the car's condition. Dealers may often try to subtract a certain percentage from the car's true wholesale or fair market value in order to create a profit for themselves when you trade it in. Use the internet and independent car sale guides to help you determine a fair price for your vehicle based on its condition. Check your credit score. If you plan to finance or borrow money for a new car, learning about your credit beforehand is key. Look up your credit report at the beginning of your planning process before you apply for a car loan. If there are any glaring problems like collections, inaccurate late payments, or other derogatory information, attempt to fix it. For inaccurate information, file a dispute with the credit bureau and with the creditor that is reporting the incorrect information. For accurate derogatory information such as collection accounts or creditors that indicate that you're currently over the limit or past due, try to pay these current as quickly as possible. It takes time to improve credit. You may not be able to fix all of the problems before you need to buy a car, but just because your credit isn't perfect doesn't mean that you can't get a good deal on a car loan. A good website to visit is www.annualcreditreport.com. You can pull all 3 credit bureaus for free once a year. Here's an example of how your credit score can affect your monthly payments and the total interest rates you pay. Consider a 5-year, $15,000 car loan with the following scores. A person with a score of 720 to 850 will get a 6.986% interest rate. The monthly payment would be $297, so the total interest paid would be $2,815. Whereas a person that has a credit score of 500 to 589 will get a 15.61% interest rate. The payment would be $357 a month, and the total interest paid would be $6,440. Find the right car. About 3 months out from when you plan to buy it, it's time to start looking into what is the right car for you. Think about how many people you'll be transporting. What kind of driving will you be doing? Around town, highways, short, long commutes, off-road? Will you be doing any hauling or towing? Where will you be parking and how much space do you have? How much are you willing to spend on gas? Don't buy more car than you need. The important thing here is think through what you need versus what you want. If your primary use for a car is a long daily commute on the highway and you'll be the only one in the car, it probably makes sense to get a smaller fuel efficient car and maybe something with a warranty if you're going to put a lot of miles on it. It wouldn't make sense to get a big four-wheel drive truck. On the other hand, if you're going to use your car to haul materials to construction sites around town, for example, it might make sense to have a truck with all-wheel drive. The point is to hold back from buying features or capacity that you don't need. New versus used. The pros of having a used car is that typically it has a warranty. You know the car's history because it's brand new. It's unlikely to need immediate repairs. Factory incentives or other special deals may exist. You may get better interest on a car loan. The cons are the price is higher and they lose value quickly. Now the pros on the used side is that they depreciate less quickly and then you may get a better deal on the price. The cons are that you're not sure of the history, you may not have a warranty, and it may be a little less reliable. The car should fit your budget. Not only should your car fit your lifestyle, it needs to fit your budget. In order to know whether you can buy and how much money you can afford to spend, you need to look at your current income and expenses. No more than 20% of your gross monthly income should be spent on installment or revolving debt payments such as car loans, student loans, personal loans, and credit cards, not including a mortgage or rent. For example, your gross income is $2,000 a month. 2,000 times 20% equals $400. If you already have bills totaling $200 a month, that leaves 400 minus 200 for a potential car payment. Don't forget to include ownership costs like licensing, registration, sales tax, insurance, maintenance, and gas, and depreciation. On the add-in side, don't forget to include credit life insurance, anti-theft devices, premium stereo systems, gap insurance, extended warranties, window tinting, special wheels or rims. Look at car prices. When you've decided the type of car and figured out your budget, it's time to get more specific and start looking at car prices. A couple of great resources are the Kelley Blue Book on the web at www.kbb.com. The Blue Book lists standard prices for new and used cars. Dealer costs can be found at the National Automobile Dealers Association website, otherwise known as www.nata.com. Another great resource is Edmunds.com, which provides price information but also reviews and rates for different kinds of cars. So you can see how the cars you're looking at measure up. A new car's value is determined by how much the factory thinks it should be sold for. A used car's value is based on a market analysis of how much that specific year, make, and model of the vehicle is being resold for and takes into account how used the vehicle is, so how many miles it's been driven. Basically, a used vehicle, whether 3 weeks old to 3 years old, is only worth what other people are willing to pay for. Finance your car 1 month ahead of time. Determine the amount to be borrowed. Research financing options such as your bank, credit union, dealership. Remember that the greater the down payment, the lower your amount borrowed. Also, the shorter the length of the loan, also called your loan term, and less interest you'll pay. Shop around to get the best interest rate. Call your bank or credit union first to get a rate before you go to the dealership's financing department. When you're talking to the lenders, remember to ask if there's a way to get a lower rate. If the dealership offers you a higher rate than what you can get through a bank, see if the dealership will match the lower rate. Make sure to pay attention to any additional fees that come with the loan in addition to interest. Some institutions will charge for originating the loan and other services. Look at these fees, ask about anything you don't understand, and try to get the best deal. Get pre-approved before you go car shopping. Shopping smart. One important distinction to know is the difference between the sample sticker price and the wholesale price. The wholesale price is also called the invoice price. It's what the dealership pays the manufacturer for the car. The sample sticker price is what the dealership is asking you to pay and is typically 5 to 15% above the wholesale price. That 5 to 15% markup covers the dealership's business costs like rent, employee salaries, advertising, etc. That markup also includes the dealership's profit. When you make an offer during your negotiations, dealers will almost certainly decline to sell a car at a price lower than what they paid for. But if you've researched wholesale prices and can calculate how much the dealer marked up the wholesale price to arrive at the sticker price, you can confidently make an offer that is below the sticker price but above the wholesale price, which gets you a good deal but still allows the dealer for some profit. Another important factor in the price of the car are rebates and incentives. These are usually offered by the manufacturer as a way to help sell the make and models that are not selling well. You'll sometimes see something like a $2,000 rebate advertised. A rebate or incentive can be a great way to save money on the overall price of the car. However, do be careful about rebates that require you to borrow money at a certain interest rate. If you're getting $2,000 off the price but are borrowing money at a much higher interest rate, then you could end up paying more in the long run. Plan on visiting more than one dealership as you start shopping. You can even call ahead to several dealers if it works better for your schedule. You want to get the best deal you can, but you can't complete offers unless you talk to a few different places. Negotiating. Decide what you can afford for the overall price and negotiate that figure with the dealership. Dealerships will often try to negotiate the amount of the monthly payment and urge you to stretch out the length of the loan to get you to buy a more expensive car. Knowing what you're willing to pay and insist on negotiating the overall price of the car. Negotiating tips. Don't seem desperate to get a car. Plan ahead to give yourself plenty of time. Ask about each additional charge and don't accept features you don't need. Ask for the offer in writing and sleep on it. Take a neutral party with you if need be, someone who can help you ensure that you're asking the right questions and considering all the details. And most importantly, remember that you can say no and walk away. Leave the checkbook at home until you're absolutely ready to buy. What about leasing? Pros and cons. Pros. Monthly payments are lower. Down payment is low. You drive a new or almost new car nearly all the time. Cons. You never own it. They usually have high mileage restrictions. And you never build any equity. Buying versus leasing. When you buy, you agree on the price for the car. You pay interest if you finance the car. Once the car is paid for, you can do with it as you please. Whereas with leasing, your monthly payments are based on the anticipated depreciation of the car while you have it. At the end of the lease, you have the options to turn the car in, buy it for about half of the original sticker price, or lease another vehicle. In summary, a lot of thought and planning should go into purchasing or leasing a vehicle. Make sure that you consider your need before your want. Be prepared to negotiate to get the best pricing and payment for your budget. Always sleep on it before signing the dotted line. Questions, comments, experiences? If you have additional questions about car buying or other personal financial goals, please contact our accredited financial counselors. You can call us at 877-202-9246 or visit us at www.yourgfm.org.